we will get the show on the road, and I think we'll be joined by a few more as we go along. So Andre, let me again welcome you to this online virtual event. We are really looking forward to hearing the story of Capitec. I want to thank Ashish Chugh for introducing the company to me. I frankly did not know about the company, and I discover now that you have a $20 or a $10 billion market cap or something like that, which is quite amazing. So I want to thank Ashish for the introduction and also for introducing me to you, Andre. Andre is, as I think all our attendees will know, until recently was the Chief Financial Officer at Capitec. He was one of the co-founders of the company, has been with the company for over 20 years. He just recently retired from that position, but it's still very, very fresh, I'm sure, in your memory, everything that's happened. Andre is going to give us an overview of the company and the story of how it became what it has become. And we will hold off questions until after he has had a chance to tell the story. And then we can inundate him with any questions and as many questions as we'd like. So with that, I'm going to again welcome you, Andre. Thank you so much for making time to speak to all of us. And over to you.
Thank you, Ravi. Good afternoon. It's actually evening in South Africa already. So, but it is still light and it is summer. So I think I've got a better deal than what you guys have. It's an honor to present to you. It's quite a pity that I can't be there in person, but maybe next time. Given the topic and that it's so wide, I found it actually quite difficult to prepare for it. And that's why I don't have slides, because otherwise one tends to get into numbers and facts, opposed to just telling you a story of how this organization started. I want to start by saying it was a lot of fun and something that I will never want to change for anything else. So in the time period that I was given, I will talk about the landscape in which we operated, how we actually started. I'll give you an interview of the financial services and banking at the time. We'll also talk about the opportunities, the what, how, and why. I'll talk about the people. That is always extremely important in an organization. And I'll share some important lessons that we've learned. So why did we start in banking? So in the 1990s, just as the country went into a democracy, financial services were mainly provided to white South Africans. I mean, call a spade a spade. Education levels were extremely low. Financial education is and was still very low. And there was a great need for all South Africans to participate in the economy, including financial services and banking. Many people, mainly government employees being retrenched at the time, was finding new ways to earn a living. And many of them took their pension funds and started cash loan business or payday lending businesses. The rates were extremely high and it was just not sustainable. Many workers received their wages still in pay packets at the time and were not banked at all. And even the banks that offered services to the low end of the market did it in a very inferior way. It was expensive. Banks were not trusted because they looked after themselves opposed to the customers. And there were very little credit bureaus for 90% of the population. So we saw the opportunity on the banking side. And many of us worked in banks, but we saw that business that we even offered was stale, expensive, untransparent, not client-centric, and not freely available, and very complex. So on the one hand, there was a major opportunity. On the other side, to take on the 4 major banks in the country that used to work together as a club. They copied each other. They didn't care about the clients. Was actually just unheard of. And everybody told us we're crazy, we can't do it. it's capital hungry, it's extremely expensive. The regulatory environment was complex and inaccessible, and we just can't do it. But we just thought, we tried some of the models and it worked in the banks that we worked. However, many of us, our board of directors, didn't really understand the gap and didn't support us at all. So a couple of us said, well, let's go and do our own thing. And I may say, at a great risk to ourselves and our families. It would either work very well, or it would be a spectacular flop. At the same time that we were wondering and looking at ideas, a group of entrepreneurs formed a new company. It was called PSG. It's a financial services business. They listed on the stock exchange a couple of years before us. They also bought a couple of paid-out lending businesses and from the individual owners that started it. They also started an investment bank and expanded it. And at the time, we needed capital. We needed a partner that can actually help us into this. So together with PSG, we went into the market to find other people that have great operational knowledge and marketing knowledge. In fact, our current CEO was one of those people that had great operational knowledge, and he's actually from the liquor industry. Now, if you know anything about advertising, I mean, liquor is a consumer good that a lot of people really understood how to communicate with the consumers. So PSG gave us some seed capital to develop the business and to buy IT systems and to really start to bank all South Africans. That was basically what we set out to do. It sounds easy if I say we started a bank, but thinking back, I really think it was a crazy idea. The team then split up. Some had to continue to run the paid-out lending business for about 8 months, and their role was to generate enough capital and cash for us to buy a system, to lend out, and to really develop what we set out to do. 5 of us spent each day talking for 8 months. We wrote our ideas down. We had a secretary that basically just typed everything that we said. We walked around the marketplace. We went to small towns, to townships. We talked to people to really understand their needs and what we can do for them. And we took all the marketing knowledge that we had available to us and to develop something. At the time, just incidentally, we didn't have any titles, positions, or jobs. I wasn't the financial director and someone else marketing. We just did everything together based on knowledge, skill, and obviously time available. Once we did our time strategizing, we wrote the business plan. We presented the plan to the funders and the rest of the team. We applied for a banking license, and eventually we bought an insolvent entity with a tax loss, which also helped a little bit. For the first couple of years, we didn't have tax because we rode on the tax loss. We got approval from various regulatory bodies, some of which were extremely antagonistic towards a couple of new people on the block, and everybody was anticipating us just rocking the boat and just spoiling the game. Then we were appointed in our formal positions, and we continued to hire more skill, got IT people, went around the world to see how other people do it or do it wrong for that matter. As a matter of interest, took us days to, for instance, think about a name. And every single name that was presented to us by ourselves and other people were debated and thought about. And then a colleague of ours who incidentally became the marketing director came up with a name Capitec, which means capital and technology. And as you may know, it's two vital ingredients for a bank. So the first principles that we could identify of building a new business were client first, transparency, consistency, and total honesty. Now, again, it sounds very easy, and each component we debated for hours and days to ensure that we actually live by it. Many other organizations would even give you the same 4 critical points, but and I truly believe Capitec is the one company, in fact, the only bank in South Africa that's fanatical about these businesses. Many businesses talk about the client first or client is king, but very few people or very few businesses get it right. It's always sort of looking after the company and then the client must just fall in. Whereas we believe if you look at the client will look after the shareholders. Every decision that we ever make in the bank is tested with these principles and whether we comply to it or not. We then went further to look at what can we use as cornerstones of the organization, something that every single individual and employee knows off by heart, not just words that they stick up, but principles that we live by and principles that every single product or service that we provide needs to pass the test. And those were simplicity and transparency. The second one, affordability. Third one, accessibility. And fourth one, personal service. I'll elaborate on these because I think that's just so important in our business. And all these values and cornerstones must always be driven by innovation. And very often, we all think innovation is something there in the cloud or something very complex. Innovation very often is just common sense. Just think a little bit clearly, and then you get to the point. So on the first one, simplicity, there's a saying that says simplicity is the ultimate sophistication. It's not our saying, but we live by it. Banking, as it is very complex. And as I said earlier on, very few people have financial literacy, especially in South Africa. And very few people understand all these complex structures of banks. So what we needed to do is take the complexity away in the system and present it in a very simple, straightforward way where everybody can understand it. Transparency and consistency is just so important because if you are not transparent and you're not consistent, you can never provide a simple solution to the market. We actually need people to trust us with their money. Always think, no disrespect to any retailer or anything like that, but if you sell a hamburger and the hamburger doesn't taste nice, you just don't go back. In this case, you take the person's money, you give, you take the insurance money, and that you form a lifetime relationship where people can really trust you. So if you say something, you have to do it, and you have to always do it and be consistent. The second one on affordability. Most banks on the savings side make use of free deposits. From day one, we said, we don't believe in free deposits. Why should someone give their money to us And we can lend it out, we can do business with it, but we don't reward them. So every single client gets a positive interest from the first cent they put into the bank. On the lending side, we many of these lenders just had the most expensive rate and people just had to fall in. So we needed to entice people and reward people for good behavior. So we explained to him that that every payment they make will give them a better rate in the future. We also worked very hard side by side with the credit bureaus to develop something that people can get the benefit of good behavior. And on the transaction side, believe it or not, we thought we will be able to compete with the other banks by charging between 5 and 10% of what they charge for a similar service. Everybody thought we were crazy, but at the end of the day, that's what we did. And the Reserve Bank and other institutions did many studies to say that we saved the South African banking population between 20 and 30 billion rand per year, because not only did we decrease our prices, but the competitors had to follow as well. So other products that we brought to market afterwards, like insurance and airtime, we still apply exactly the same principles of affordability. On the accessibility side, the third pillar or value is we needed to provide banking everywhere at any time where people live, shop, commute, and work. Now, obviously, 2023 looks very different to the turn of the century, whereas most banking services and products are being provided virtually. But at the time, it had to be done with branch network where we could actually speak to people and created a trust where people can, in order to convince people to put their money with us. Again, consistency plays a massive role. We started with very few branches. We've got just under 900 branches now. And a lot of people actually say to us in the market, but you don't need branches anymore. But incidentally, there's about 6 million people that frequent our branches still every single month. And that's where we have the opportunity to communicate our products to the market, where we can actually become part of the community, because whether you like it or not, word of mouth is a massive marketing tool that we can actually use. On the personal service side is every client needs to feel special, cared for. They need to feel important. And whether you communicate face-to-face, through the media, through call centers, advertising, the principle remains exactly the same. Think about if you phone a call center and the call and the computer says there's 5 choices. You don't necessarily understand which of the 5 menus you should choose. And at the end of the day, after 15 minutes, you just hang up because you don't know what the answer is. You don't get to the right people. You speak to a computer. And people don't like that. People want to feel cared for. So whenever you do a business, even if it's virtually, you have to do it in a way where people feel cared for. So what did we do and what do we still do? We really live for our values in whatever we do. We imprint them in training, in discussions, in workshops to ensure that everybody in the organization applies it and understands it. It's no use for top management to do that alone. And whatever you say to the market, it's a promise, and you always have to test it to your values. Otherwise, you will be caught out. just on the people side, many companies say, well, our people are our most important asset. But how many people really live that? How many CEOs, how many companies really believe in what they say? So I always think there can only be a certain amount of people at the top. But we do encourage people to continue to help us to develop new ideas, to come up with things. And we actually test it, we discuss it. We don't just throw it in the bin. Also, if you really think about it, most big organizations delegate or outsource their brand to the people that serve their customers. And those people are very often the shopkeepers, the cashiers, and the lowest remunerated employees. That's why it's so important to make sure that they too really buy into the value system of the business. So I always say that we need to capitalize our staff to really help them to think like we do. And we've tried many models to train new recruits. And in one of my previous jobs when I was a youngster, every new recruit went to a central place to have their training. And that's what we actually adopted. Every new recruit came to Stellenbosch to have their training there. That's where we taught them hard skills, soft skills, and taught them the culture of the business. They also met management, and we made a big fuss of it. We've had hundreds of these firm foundations, as we call it, and we had up to 100 recruits per session. It's fantastic. There's a buzz. People feel that they belong. And we celebrated them. We celebrated every end of session. They worked very hard, but they actually, they got rewarded. They met all other people from all over the country. And the people that taught them were or are the managers in the branches that really know what's going on. So the bottom line of our whole training is you take someone from 0 to hero, someone that will be competent, somebody that will know the business of by heart. And again, I would like to stress, never, ever forget how important every single employee is of the company. So I talked about 0 to hero in a very short time. But I have to tell you a story about the flip side. It's as important. Never think that you have arrived, because the gap between 0 and 0 is very, very low. So a couple of years ago, on the 30th of January 2018, I will never forget that day, we were accused by short sellers of committing fraud, overstating our results, ripping off the clients, being illiquid, being insolvent, exploiting the staff. They accused the central bank of not understanding our business. And generally, they actually called us a lot of thugs. Our share price tanked by 40% intraday on that very same day. And the accuser and his associates were short sellers, and it was the first time ever they targeted a company in South Africa. And because we were so successful, they thought it was going to be an easy target. We knew all the accusations were not true, and so did our staff. And I'll come back to that. But we had to convince the market that the short sellers were wrong and they're doing it for their own benefit. So that's where the principles and values kick in. And because we started the business, because we as a management team is so much involved in the detail, we could actually take them on and and prove every single one of those issues a lie. We didn't underestimate them. We didn't not do anything. Capitec was our baby. And what we needed to do is to go back to all the shareholders, the regulators, the non-executive directors, the funders, the client, the media, the suppliers, everyone. And because we had such a good relationship with them, we could have innings with them. On the first day, for instance, this happened at 9 o'clock in the morning. At 4 o'clock, we issued our first answer to the Johannesburg Stock Exchange. Then we had a phone call where 720 people phoned in to participate. And those are typically the fund managers and so on. We went to see the regulators, and for about a year, it was backwards and forwards and backwards and forwards. We actually got 2 independent accounting firms to come and do a full-on audit in the bank. They were probably there for 3 months, and not one single one of those accusations were actually true. But what I think is important is, because we have a value of honesty, simple communication, I think that was what actually saved us on that day. And may I say, many MBA students and master students across the globe have done their studies on how Capitec actually handled this fiasco. And I think we came out really scoring a lot of points. I have to just give you some few statistics just to show how the company has grown. 2000 is, let's say, 0.0, and call it 2002 was when we really kicked off and when we really started seeing clients and so on. In 2010, 10 years later, we had 422 branches. 10 years after that, in 2022, we had 856 branches. In 2010, we had 2.1 million clients. In 2022, we had 19 million clients, of which 5.1 are banking clients that actually pay their salaries into Capitec. In 2010, we did 553,000 transactions per month. 18 million transactions per month. In 2022, we do 522 million transactions per month. Our returns are consistent between 26 and 32% on capital. We had 4.7 thousand employees in 2010. In 2022, we have 15.3 thousand employees. On the asset side, we had 10 billion rand of assets. In 2022, we have $10 billion, or 182 billion on assets. And our annualized profit grew from 840 million in 2010 to 9.3 billion in 2022, which is 10 times as big. I'd like to just share a couple of pointers with you in my last sort of 10 minutes. And I think those are the lessons that I personally learned. And I think for me, it's of great value that one needs to understand the good or the bad of being an organization. The first one I'd like to share is, don't take credit for things that go well. Give that to the team, the them. If things go wrong, then own up, and then it's me. Too many people do it the other way around. And I promise you, people work very hard. they make senior managers. So don't take the credit, pass it on to other people. Allow people to make mistakes, help them, and don't just leave them. Too many people want to fire people if they make mistakes. Learn by the mistakes. It's very good. On the other hand, I do believe there's nothing worse and demotivating as a bad leader that does not act against lazy people, because you just pass on the word. Pay attention to detail. The devil is always in the detail. As a leader, lead people, don't manage them. I always think about a sports game. A captain or a leader is on the field. They need to participate. They need to lead from the front. The manager sits up somewhere on the stand in a glass box. So don't manage people, lead people. People don't mind to follow people if they believe in them. And that's why, again, you need to apply your own values to it. Lead from the front. You should be able to understand the big picture as well as the detail. Too many managers or leaders don't understand the detail. Work hard, but not at all costs. I always say to people, be careful of Capitec, be careful of big businesses. They will take every single business, every single minute of your day, and it's not healthy. People fall over, and very often families split up. So be careful of big organizations. Spend time with your family, and very importantly, take them along on the journey. Spend time doing your sport, your hobbies, play with your dogs. Prepare for meetings. Keep meetings that has purpose. I always find that there's too many people at meetings. There's a couple of people that contribute, and the other people just sit there. They waste your time, get them to do something else. Very importantly, when you launch products or services, train people well. Make them excited about the new lines, because they need to sell it. Very importantly also, don't ever think that you've arrived. I explained earlier on the difference between 0 and 0 is very small. Always tell the truth. Mark Twain once said, if you tell the truth, you don't have to remember anything. It's so important. When you speak to stakeholders, to asset managers, to other people, to clients, they take notes. They listen to what you say. If you change your tune in a later stage, you create a lot of mistrust. Don't do it. I once taught my kids on their 16th birthday, and I've got 3 sons. You must always think about who are you when no one is looking. Understand the weak points of the team and compensate for them. We can't all be good in everything, but if we know where the weak points are, we can actually compensate and stand in for them. I might mention of this before, but pay attention to people, their families, their illnesses, their achievement. It motivates people and brings them purpose. If you go to a function and you take photos and you distribute it towards the people, what do people do? They go and look if they are in the photos, because all we want is to look good and to actually just get acknowledgement and to make people feel good. Make advertising as tangible as possible so that people can measure the benefit or the deliverable. Know your competition inside out. If you sell Mercedes and people ask you, but what about BMW? You can't not know, you have to know. You have to tell them where the benefits are. It's so important. Never underestimate competition. That was the biggest mistake our competitors did. I saw a couple of youngsters that want to start a bank. They didn't give us 5 minutes of time. And now we have more clients than them together. Don't ever underestimate them. Continue to work hard and continue to work on your culture. things change. The mix of your client changes. Political things change. It's important. Stick to the principle of client is always first. Be in love with your client. Do everything for your client. When in doubt, calculate the odds. In other words, don't gamble, but you have to follow your own instincts. And if you start doing that and you train yourself, you eventually know what's right and what is wrong. The most dangerous thing, I think, for entrepreneurs are when they pass the baton to their successors. If you think about it, and if you look at a graph, an entrepreneur's what and why is perfectly aligned. But people will still continue to do the what, but they don't know the why. And that is when things go wrong. So when I appointed my successor, and I still do it, I spent so much time with him because his success goes directly, points directly towards me. And what I want is him to be much more successful than I am. Always remain humble. Another thing is, remember, focus is not only what you do, but what you don't do as well. Sometimes you have to say no. Sometimes you have to think, goodness, it's a very good idea, but it will take away the focus that I need at this point in time. If you cheat or compromise, your staff will catch you out. They look at you, they understand the business, and don't ever think that you will get away with it. They will catch you out. Be conservative and treat your company's money as if it's your own. It's not the shareholders' loan to keep management and staff entertained. It should be the other way around. How many companies have you seen that the management and the staff go on these elaborate parties, stay in the penthouses and everything on company money? It shouldn't be that way. Likewise, if I said it earlier on, if you look after the client will look at the shareholders. Continue to learn and stay updated. And in closing, just on a personal note, when I was young, I wanted to be an architect. I wanted to show people this is something that we made. This is something that we designed. On the other hand, I also like business. And if I think back in my career, building a bank was achieving both those goals. And I personally will always be very grateful for the opportunity to have been part of such a great journey. And that's all I have to say in 30 minutes or 35 minutes.
Fantastic. Thank you, Andre. There's so many nuggets in there for all of us. I'm going to invite our attendees. If you would like to ask a question, just raise your hand. I can see all of you on a grid here. So if you use the raise the hand symbol, I will ask you to ask the question yourself directly so that you can put it in your own words and I don't have to paraphrase. As we get that started, Andre, I read a short article about Capitec in Harvard Business Review, someone had written a few years back. And it said that you started the bank initially by targeting the rural consumers. And you mentioned that you bought the payday loan branches or operations in some of these cities. So I read that and I was thinking, based on my own work in other emerging markets, that you were targeting the unbanked. In other words, you were not really going for a share of the existing market. You were creating a new market, which was people who were really not being, who didn't have access to banking services. So my question is, and then I read somewhere that after some years, you actually shut down those branches in the rural areas. So my question is, why did you go after that segment, which conventionally would be considered the unattractive segment? And of course, I know there are good reasons to go after them because, they're pure concerned about inclusive finance and so on. But my question is, were you able to actually turn a profit serving those kinds of customers? And related to that, one of the advantages of digital could be that it lowers the customer acquisition cost, including some of the costs of processing an application. For instance, I don't know if you know your customer requirements, and if you can do that digitally, maybe it's cheaper and so on. So can you speak to both of those aspects? Why those customers, and could you make money serving them? And what does it cost to acquire one of those customers compared to your established incumbent rivals?
Okay, so to start with, you made various statements and you actually asked various questions, not only two. But let me just go back to, if I show you our business plan, nowhere in the business plan does it ever say that we created the bank for the bottom end of the market. The business plan says very specifically, we want to serve all South Africans. But having said that, the middle class and the upper class, call it 10% of the country at that point in time, had banking. It was a grudge purchase. They did pay too much, but I suppose you have to start somewhere. There's one of the private banks in South Africa that started only with, let's say, 0.01% targeted market, and then they moved down. We did it the other way around. We said we need to create a bank that includes everybody, and that's where the masses are. So if you can have a couple of million of clients opposed to 0.01% to cover all your costs and to really expand, that's really the model where we want to be. The one way to have started to have a relationship with people was to provide lending products to them. And in the rural areas where people were still operating on a pay packet, and where you could actually communicate with people, that was a very good way to start. Incidentally, we didn't only go into the rural areas, but in the rural area, you could actually see us, whereas in the cities, we were just one of just many organizations. The big problem with going in at the bottom end of the market, as I mentioned earlier on, the lending was extremely expensive. People didn't understand credit. They didn't understand financial services. So you actually had to price your product to cover your cost. A lot of people reneged on their debt. And that's why we had to create a system where you say, it's fine, we're going to have to charge you so much, but if you are good and you pay your debt, we will give you the benefit of that. Incidentally, when we entered the market, we immediately slashed the prices in the market by 50%, but it was still very expensive. So the next step is, once you start providing financial services, you need to get to a point where you create the trust, because it's fine for me to give you a loan. You don't have to trust me. I need to trust you. But now we needed to turn it around. And we needed to get people to say, well, we'll pay you to put your money in the bank, because we provide everybody with a positive interest rate. But we will make it so inexpensive for you to do banking that you eventually need us more than what we need you. And that was the process. Incidentally, a lot of people, when they started liking us, say, you know, the person that works for me has opened a Capitec card. And eventually my children has opened a Capitec card. Eventually my wife has, or my partner or my husband has opened a Capitec card, but not the breadwinner. And that took a lot of years, probably 10 years, or even more in some instances, where the breadwinner says, you are now such a fantastic job. You, a bank, you actually participate where the big banks participated. And that's why I said the other banks never took us seriously. They never thought that we are really going to eat their lunch. And that's where we are. We haven't arrived. We still don't have the very rich or whatever on our books. Many people are still dual banked, but we're getting there. It's chopping away slightly. On the digitalization, it's very true that for the informed people, they can open a bank account on their cell phone or computer very, very easily. For most people, they actually still want someone to help them because they don't want to make mistakes. For instance, we've got an insurance product that's significantly less expensive if you actually just open it, create your own beneficiaries by doing it digitally. 85% of people still come to our branches. Why? Because they feel more comfortable. They might make a mistake, and that is their life insurance. So it gives them a little bit more comfort that someone else helps them. And that's why the trust component is so important. Just lastly, we have talked about it very often. Was it the right way to get into the bottom end of the market? Because you create a perception that you are the poor man's bank. And that's the last thing you want to do. But we had to start somewhere. And that was our journey. And that was probably the only journey that we had. But it is something that took probably at least 10 years to get rid of. We haven't walked away from serving those people that we started with. In fact, we have never closed a branch, ever. We have merely moved branches. We might have been in the back streets and we moved to the front streets, but we haven't closed branches. We still true to do business with everybody. We just don't need the reputational risk, for instance, to serve people, providing them with cash loans. If you haven't been able to move on and become more formal in your lending, for instance, then it's probably best for that person to remain with the cash loan business so that we can concentrate on the better for the bigger population.
Okay, thank you, Andre. You didn't touch on the cost. Did you have an estimate of the cost of customer acquisition?
The cost of
a new customer.
Obviously, the more clients you have, the more products you have, the lower your cost per unit actually becomes. But what's important is when people open an account, and do it digitally, we will always follow that up with a phone call or so to make sure that the client actually understands us, to make sure that the client actually feels that we are there with them in their journey on the financial services. I can tell you that everything that moves in the organization, there's a cost to it. If you go to a branch, if you take all the cost of the branch, the rent, the personnel cost, the furniture, everything, that is in the region of 10 Rand per minute. If you do it via telephone, it's in the region of 4.50 Rand per minute. And that's all calculated into the cost of actually giving services to the clients. And many of those costs, for instance, are either for free or we don't charge for it, but it's basically built into the monthly charge. To give you an idea, I bank with 2 banks. All of us have at least another bank so that we can compare what we do with the one bank to the other to see if there's something good for the one or the other. For the one bank, I pay 650 Rand per month, and at Capitec, I pay 6 Rand 50, which is 100 times less than what the other bank charges me.
Can you speak to the reason for creating the physical branches in addition to the digital, the app? I know that brick and click have converged in many industries. If you started with brick, you added the click. And if you started with click, you added the brick. But you seem from the get-go to have recognized, and this is way back in 2000, this is before we even knew some of these lessons, that there was going to be a convergence of both the digital and the physical. And you really needed to have both, and yet be able to compete very powerfully against the purely brick and mortar banks.
Again, I'll talk in South African rands. It's just much easier for me off the top of my head. But typically, a bank branch of our competitors would cost anything from 1 million to 4 million. Our branches typically, 8 million Rand for our competitors. Our branch with the ATM and all the furniture is about 1 million. Branches are typically, call it 250, 300 square meters, opposed to, let's say, 10 times as much as that. The physical branch has a couple of benefits. The one is it's a natural advertising, because you see the brand the whole time. And as I said, more than 6 million of our customers frequent the branches still. So I don't think I have been in a bank branch, apart from doing my job, for 10 years, because I think maybe I have to say that I am financially literate. I don't have to get anybody to explain things to me. But most clients actually want that. Our funeral business, for instance, we've got about 2 million clients that take funeral policies with us. That's an insurance product, very similar to a life product. And I just mentioned to you that people want to speak to people. People want them to help them to do that. So what we've done is, wherever something is more digital orientated, we train people and we send them off to go and do it themselves. I mean, a simple thing like a bank statement. I take a bank statement, download it on my computer. For most people, they just want the bank statement. Now you can say, but why don't you just print the bank statement at home? Because 80% of our clients don't have a printer at home. So they come into the branches, there's a self-help terminal. They do everything on there, similar to what they do on the computer or their cell phone, but it has a printer there, and they print their paper. And that you can only do at a branch if you don't have a printer. So many of this has a logistical thing. The same applies to cash. I never carry cash, whether I'm in South Africa or anywhere in the world. I just don't carry cash. In South Africa, cash is still 90% of retail is done in cash, believe it or not. It's something that the whole industry and the government and everybody needs to work together. People pay each other with cash because they don't necessarily understand the digital landscape fully. We're getting there. I gave you some statistics of how many transactions we do on a monthly basis. But in the townships and the small towns, people still operate in cash.
Are you familiar with a company called Visit?
Yes.
South Africa? That
yes.
I taught a case that refer to that company, and they attempted to serve only the bottom of the pyramid and really struggled. They worked with, I think, ABSA, I think, or one of the smaller, no, the Bank of Greece or something like that. And they didn't have a really strong partner, and they struggled. I wondered if you had any observations on their strategy.
Well,
they were very much aiming at the bottom of the pyramid, I think.
Yeah, so there's a lot of things. There's never only one reason, but many of the reasons that I mentioned earlier on. Firstly, if a bank does what these, let's say, specialty companies do on the tech side, then why even bother to go and get other services or, let's say, wallets or whatever that's not interoperable? And I think the most important thing is one should never underestimate the trust element. It took us years to create that. And that's why I said, whatever we do, everything you do can just break down trust. You can't create trust. Trust is something that comes a long way, but you can actually destroy it within a couple of minutes. So our aim is to really understand what our competitors do and to make sure that we are continuously better. We should furthermore not wait for them to pop up and do something and then follow them. We should do it from the outset. And I think that's also something to take into consideration. Many of our competitors, for instance, link up with other partners because they don't do something themselves, or they want to create something knee-jerk. Again, you don't just create something out of the blue. You have to be, you have to have a proposition that actually that you can actually measure. I mentioned earlier on, if you advertise, for instance, make sure that it's tangible and measurable. Some of our competitors, for instance, if our pricing is R6.50, they will price it at R6.40. No one will change for 10 cents. If you make it zero, or in our case, the general fee was in the region of between 30 and 50 Rand per month. We made it 2 Rand. Now that's a proposition. And for the competition then to follow is very hard to do. And I think the last thing on, let's say, smaller companies or people using rent a bank to get into the system, even fintechs struggle. The moment you have to put security and volumes on any idea, it changes the landscape. We work with many fintechs, fantastic ideas, but as a bank, you need to close all the loops. And the moment you do that with the fintech quick and dirty product, that's where things fail. And volumes as well. Anybody can do 10 transactions per minute or whatever. On busy days, we do up to 12,000 transactions per second. Now, you have to have a serious system. You have to have serious security. You have to run your models. I mean, if you think about it, if with our 19 million clients on a pay date and people stand in front of the till at a grocery store, if our system falls over then, we are in big trouble. It will take us years to recover from that.
How much capital did you need to get started? And how long did it take you to break even? And I'm thinking of the costs of developing any software and the marketing, the opening of the branches until they all become cash positive. And how did you fund that?
Well, I always say we mortgaged our families and our wives and everybody, not really, but we took everything that we had. We took maximum mortgages on our houses. We were as geared as we could, the entrepreneurs that actually started the business. We put in 10% of the capital. PSG effectively put in 90% of the capital, and that was only 250,000, which at the time was about $25,000, which wasn't that right. The most critical point I might mention, when we started, we split the team. Portion of them had to do the cash loan business, and the other portion had to think about the ideas. And the cash loan business at the time actually helped us to pay the bills. So for all practical purposes, I think since we started, we were not profitable for maybe 6 months in total.
Wow.
And for the rest, our business actually carried us forward. Initially, 90%, well, initially 100%, and then over time, 90%, 80% of our revenue and profits came from the lending business. And only in about 2012 did we get to a point where it's roughly about 50-50, and 50-50 being on the transaction and savings side and the lending side. One of our major competitors at the time was a lending-only business. We always said that it's setting up for failure, because if you're a lending organization only, you have to lend at all costs in order to grow. And that's the last situation you want to be in. When the economy is tough, you actually cut down on the lending side. And because your products are so well priced on the transaction side, many people say, but why should I spend 100 or 200 or 300 to own a bank account? Let's move that to a Capitec. And that's when, in bad times, your let's say transaction business grows. In good times, your lending business grows. And hopefully in the process, when the cycle turns around, people don't walk away from you because you provide them with a superior service.
And do you use the big data analytics and so on to make your own assessment of the creditworthiness of your customers based on history of their transactions with you?
So
or even using the payments?
We probably have at least 300 to 400 data specialists. That's all they do. They analyze information. Everything that happens in a branch, we actually have full sight of it. I'll give you an example. We measure every single one of our consultants 4 times per hour. We can see what they do, with who they do it. We can see, for instance, a simple example, to open a, call it a funeral policy, takes 20 minutes. If an employee continues to, let's say, only use 18 or 17 minutes, we will actually go and do a full-on investigation on that consultant to understand, is the consultant doing something that we can all learn from, or are they taking shortcuts? On the flip side, if they continuously take too long, is it because they talk too much? Is it because they don't know what they're doing? So if you have 19 million clients, you actually have to do that continuously. On the lending side, it used to take, let's say, half an hour to make a loan. Now it can be done for all practical purposes in 3 seconds if you have all the information. So we developed machine learning, for instance, to analyze your bank statement. The moment your bank statement, a foreign bank statement, is fed into the system, we can actually read the bank statement regardless which bank it is, or if it's our own bank statement, you can actually analyze it. You can see how much the person uses for groceries, you can see how much they use for rent, etc. And that all has something that you put into the system. We use psychology even on the lending side. Let's say a simple example is if you drive your car and your car is below quarter with gas, then you are, strictly speaking, according to psychology, a worse risk than if you actually fill your car when it's half already. Now, I personally drive until the very last in my car, so it doesn't necessarily say anything, but we use everything with data. That's what we do. We analyze where people spend their money. We analyze what people do. We analyze when people get paid. We even analyze the employers, because if you are a stable employer, then it's easier for us to give you a loan. If you work with an employer that pays you erratically, then that immediately has an impact on your success of payment. So the answer is absolutely from the start, and that obviously gave us an advantage as well, because we started only in 2000. We didn't have any legacy systems or anything. We could build on that, while the other banks had to fix their systems. But on the but flip side is also true. You have to make sure the whole time that you don't fall behind.
Yeah. Our time is almost up. So let me ask you as a final question: how can the rest of the developing world, maybe even other parts of Africa or even the developed countries, learn from your experience? And have you had organizations from other countries visiting you to try to learn how you do something? And do you think you're doing anything that is maybe some innovations that of your own that are not just new to South Africa, but actually maybe even new to the world? Do you have a sense?
I don't really think we do anything so special. It's really in the way that we do it. It's the mindsets, it's the values, it's that very thing that I talk about the whole time. The client first. Do you test it? Do you provide something as a simple solution? The big problems with, let's say you mentioned Africa, to really build out your business, to really give the client the benefit of everything you need to do, is you need to create a payments environment. And that's something that South Africa has always had. We are, and if I may, we are streets ahead of the USA in our payments solutions. And that's that's just, I would say, a fact. Every bank is interoperative. If you make payment to someone now, the money can physically be in the other account at another bank, in another city, whatever, within 15, 20 seconds. You have to have bureaus, where in Africa, for instance, it's a major problem. You have to have a sophisticated fixed line telephone system. It's very difficult to build a bank that's interoperative, that's on time, real time, with only cell phone technology. And then I suppose it's the laws of the country as well that make a big difference. If people are not used to trusting the system, you will find it very difficult for people to to put their money in the bank. They'll rather put it under the mattress otherwise.
Well, thank you, Andre. This has been absolutely fascinating. I hope we can continue the conversation, because this is an area in which I myself do some research, the innovations in industries where, the developing countries can leapfrog. And that's really what you have the advantage of, being able to take a new approach to banking that the legacy banks could not, and you turn that into a real advantage. I call that the late mover advantage. Usually we talk about first mover advantage, but there's something to be said for when you can leapfrog. There is a significant late mover advantage, and you have done it. And going back to your comment about how you wanted to be an architect and who could build something that you could be proud of, this is certainly something you've built over 20 plus years, taking enormous risks in the early years. I mean, you were a partner, I think, with one of the big four companies before you got into this. So you clearly were taking some risks. So what a gratifying story. And I'm going to give Ashish the last words. And Ashish, thank you again for the introduction to this amazing story. And over to you, Ashish.
No, thank you so much, Andre. We've been long-term investors in Capitec. I've been investing for many, many years, since 2006, and have seen the great growth and how the company has really navigated the turbulent times in a place like South Africa, both macro as well as things like you mentioned, for instance, the short seller attack. And we've always been in awe of management. We invest in high quality companies, and certainly Capitec is up there amongst the best of the best. So thank you for your leadership of the company, and I hope you have a great time in your retirement. As you said, I'm sure you're very busy, and hopefully we get to continue our relationship even in your retirement.